Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. You know, I got to say, I love talking about those technical indicators that everybody knows about. It's always fun to be in with the in crowd, but I also, in particular, maybe like revealing other things that are out there, maybe not everybody's aware of. We're going to be exploring an indicator that might fly under a lot of traders' radar. It's known as the Arun oscillator. We're going to be exploring how it's built, how it might be used to identify trade signals. We're even going to be running a scan to find trade setups using the Arun oscillator. So I'm really looking forward to this discussion. Go ahead and let me know if this is a familiar indicator to you, or if not, just chat in a quick no. But before we get into that discussion, let me first of all say hello to everybody who's already chatting in. Great to see so many familiar names out there. Hello there, Chris B. and High Speed Low Drag, Jill, Josh, Mary, everybody else. Thanks for joining us week after week. Always do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, enjoy the presentation, but be aware that you're invited to join us in the live discussion. If you'd like to be here, this is a Friday webcast series. We kick things off promptly at 1 Eastern time. Now, I also want to let my live stream audience members know that my very good friend, Mike Fairborn, is going to be hanging out in the chats with us. Mike is going to be addressing any questions that I can't get to just during the flow of the presentation. Thanks for having my back there, Mike. And Mike and I would also like to issue an invitation to everybody watching. If you have an account on X, give us a follow there. You should be following your favorite presenters on X. That's the best place to connect with us in between these live streams. You can find Mike there at Mike Fairborn CS. You can find me there at Cameron May CS. But let's get into this discussion of the Arun oscillator. And as we do, of course, there's going to be risks associated with this and all and other approaches to trading and investing. So bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. Investing involves risks, including the loss of principal, and any investment decision you make in your self-directed account is solely your responsibility. All right. So as we get into this discussion of the Arun oscillator, let me just take a look over here and see if anybody has said, yep, I'm an Arun oscillator veteran. Rick says no. Paul says new to me. Chris says I'm familiar with it, haven't used it in years. Paul says, let's see. Oh, you corrected yourself to new. There we go. Okay, yeah, looks like it's going to be a new indicator for just about everybody out there. So I'm going to try to go at a pace that everybody can follow. First thing that we need to do, of course, is look at our current example trades in our paper money portfolio. We'll bring up the technical logic for those trades, see if anything needs to be done with those. Then we're going to take a quick peek at the S&P 500 through the lens of our trend, value, momentum strategy set. Then we're going to be planning and placing a new trade using maybe a new indicator for most watching called the Arun oscillator. It might be a little bit of a hidden gem for some. Obviously, this is not a promotion for any specific indicator or oscillator, but yeah, it's always fun to learn about other possibilities, right? So let's go to the Thinkorswim desktop trading software platform. And here are our three current positions. We have Amgen, we have BAC, and we have AT&T. So let's start with the Amgen. We have 20 shares. Right now, you'll notice we're underwater on this trade. This is actually a trade that should have been concluded some time ago, but I put the trade on, and then I went on vacation. Well, let's go get an update. So let's go to our charts. Now, this is a trade that was taken on a shorter term time frame. And as we go through the technical setups for each of these current trades, I'm going to be using different indicators for each one. Each of these were explored and explained in detail in a previous webcast in this series. So if you happen to miss those, you want to go see, the detailed logic of these trades, make sure that you've subscribed to our Trader Talks channel first. So you can go down, click on the subscribe button down in the lower right-hand corner of your window right now. That doesn't cost anything. It only takes a moment, but our YouTube channel is where we house all of our previous webcasts. So the full channel name is Trader Talks Schwab Coaching Webcast. You can just find that on YouTube, and then you can go to the playlists. Now, before we go to the playlist, I want to show you where we can find these other discussions that we've had. I also want to point out this is a relatively new feature. Not everybody's discovered this just yet. Make sure that you're pausing just to take a quick peek at what we call the shorts that are available on our channel. And I wanted to point this out because if you look at this most recent one, it says, can this indicator help to spot explosive stock moves? And this indicator should look familiar to some of you who are in last week's discussion. It is a TTM squeeze indicator. I think this one's only about, how long is this short? Maybe a couple of minutes. I want to check that one out. But in any case, let's go to the playlists. And we have a lot of playlists on a range of topics. Mine is, if you scroll right down here, Advanced Charting Techniques, you can go to the View Full Playlist. And then you can go down through this playlist and find the previous webcasts that we've had. For example, the one that we are talking about is covered right here, the example chart system for faster signals in faster markets. So this was a faster signal in a shorter term time frame. We were looking for a crossover of an exponential moving average over a triangular moving average on a short-term time frame. These were on hourly charts. So if we want to revisit the logic of this trade, here it was. We took the position right here as our 5-period exponential crossed up and over our 20-period triangular moving average entry. The plan was to sell on a bearish crossover. We put this on our chart during the discussion. There was actually a bearish crossover right there, which would have had us out slightly profitable, a little bit of a profit there. But we didn't have a webcast at that point. And then I went on vacation. So when we came back, we just had to reassess. Okay, well, we didn't get out. How are we doing now? Last week, we talked about this, and our 5 right now is above our 20. Had it been below, I probably would have just exited. It's still above. Ooh, look at this. It's getting close. How close is that? Trader might want to come back here and look to see, do we close out an hour below where the 5 crosses down below the 20 triangular? We'll see. But we're going to leave that one on. Let's have a look at our next trade. We're in Bank of America in 100 shares, up $189 at the moment. So let's look at our BAC trade. So BAC, we're going to have to switch this back over. This was a little bit longer term, not a truly long-term trade, but we used the 1-year daily chart to place this trade. And if I go up here to studies, we always save our study set. So let's load up the study set for BAC, and that was our TTM squeeze trade from last week. So here was our TTM squeeze. The trade setup is to look for a series of 5 dots, at least 5 dots, and then when we get the appearance of a green dot, if that's accompanied by a blue histogram bar, we look for an entry. That's the entry. And then to determine our exit, we look at the highs and lows leading up to that entry signal. So that channel was established. It looks like we're going between 42 up to about $45.50. That gave us a target up here at about 48.5. And we've been working our way in that direction since. So we'll see if we get up there. We have a limit order to get out if we get up to our target. We have a stop order should price reverse and come back down into the previous channel. So we're going to leave that one alone. And then finally, we have our AT&T trade. This one we've been in for a little while. So this one was our parabolic stop and reverse. So let's load up our study set for AT&T. The PSAR is what that's called, parabolic stop and reverse, plus a 100-period moving average. Concept here is we entered on a PSAR entry with the 100-period moving average moving upward, and we're just going to move our stop up below, 1% below, our parabolic stop and reverse dots if they continue to climb, and you can see they've still been climbing. And so our current dot, if you look up here, see the red number? Just up there to the left of my arrow? If I point at that present day, the current value is 27.52. So 1% below that would be 27 cents below that. That would have us around 27.25 for our stop. And our current stop is here at $27. So I'm going to click on that. Let's drag that up. let's take that up to 27.25. That's going to have us right. Let's be as precise as we can. Right about, it's a little bit fiddly. There we go. 27.25. We're going to stop. We're going to cancel and replace that stop order, moving it up to 27.25. Of course, with stop orders, there's no guarantee that the execution price will be equal to or near the activation price. Bush 8531 says, I'm just a little late. Well, welcome. Great to have you. I'm going to send this order off. There we go. We moved that stop up, canceled the original. No, there was not a commission charged to do that. There would be a commission on, well, actually, this is a stock trade. There wouldn't be a commission, but for some types of trades, there could be. In any case, that would be if the trade were executed. Let me point this out again, though, because we've just gone through a few other chart tools and indicators not everybody's going to be familiar with. So just make sure, again, if you're not familiar with these, you can go to the archives of previous webcasts. And for example, if you wanted to see that TTM squeeze discussion, that was from last week in the Advanced Charting Techniques playlist. You can find it right there. Looks like about 4,200 people have found that already. Rick says, will I be able to rewatch this video? Yeah, exactly. Yeah, Rick, you can find it. Here's the whole process. Find our Trader Talks Schwab Coaching Webcasts channel on YouTube. Go to the playlists and then look for Advanced Charting Techniques, which is about 6 rows down. There it is. View full playlist. All right, so that's it for current positions. We have 2 that we are leaving alone for now. We have one, we snugged that stop up, just in keeping with the original plan. Stop 1% below the parabolic stop and reverse dots. So now let's go have a look at what's going on with the S&P 500. Sometimes this is a fun exercise, other times not so much. Today, yeah, for those that with a 401k where we're broadly invested in bullish things, for the bulls, it's a great day. We don't need the parabolic stop and reverse here. Let's switch this up to look at this through the lens of our typical S&P 500 example study set. So let's load up our TVM. That's the Trend Value Momentum Strategy set. Let's load that. I missed it. Let's do it again. There we go. All right. But the one thing I want to point out before we even look at the technical studies is just what's going on today. I think most people are aware that 2 records were set today. Number one, it is a record high for the S&P 500. So this high that was achieved back on February 19th, we saw that sell off into a bear market. Well, we've pushed up through that high. So that's record number one. It's an all-time high. But also, in doing that, this has become the fastest bear market recovery for the S&P 500 in history. The previous one being the recovery from COVID, which took, I think, 126 days, a little bit beyond 4 months. This one was done in just over 3. Udash says, can we use TTM squeeze for other things? Yep. Conceptually. Now, regardless of what one is trading, and regardless of which technical technique is being applied, I got to say, there's no guarantee of performance from one trade to the next, right? We know that we have to acknowledge risk, and we have to have therefore most traders have a plan for risk. But in any case, yeah, could this be used for things other than stocks? Yep. Okay, but let's learn about a new study. Oh, no, sorry. We didn't even look at the technicals for our S&P 500. Yeah, if you're not familiar with our Trend Value Momentum Strategy set, this is used by traders who are looking for, first of all, confirmation of trend. And in this case, we use a combination of triangular moving averages, sort of intermediate and a longer term moving average. And our intermediate has crossed up and through our long, which is typically interpreted as bullish. So could this breakout go for an extended run? That's what a technician might be expecting here. Now, even within an extended run, they're likely to be shorter term ebbs and flows. And that's where they might use an oscillator or a combination of oscillators to maybe, if they're planning to get into new positions within that trend, these might assist with the timing. So we have our trend, we have our the value oscillator, which in this case is our RSI. For some traders, when they see our value oscillator rising, that might just mean they're not getting the best prices recently. I think that's fairly obvious. But when that value oscillator reaches quote unquote extreme lows, extreme commonly being defined here as a dip below 40 on the RSI, maybe in the short term, that might represent an opportunity to get in at lower prices. We don't have that right now. It doesn't mean it's bearish. It just means that through this lens, it might not be, quite as good pricing as what was recently available. Now, another thing that is interesting and pretty bullish for our technical traders is our momentum oscillator, which in this case is our MACD histogram. A common thing that a trader will look for here is a dip down below zero, represented by bright red histogram bars, and then a shift to dark red. That might signal a shift in short-term momentum from selling to buying. So if we're working on refining entries, if we have an upward trend confirmed or established, and a trader is just looking for stocks to blow off a little bit of steam before entering again, this might be just that sort of a signal. And you can see in the past, that's been a pretty good, not always 100%, but a pretty good indication that we're at or near short-term lows. So trend, value, momentum, each seem to be pointing toward continued bullishness. We'll see if that's the story that plays out. Jill says, is TVM appropriate for individual stocks? It is used by some traders. I can't say it's appropriate for everybody, but yeah, conceptually, this could be used on individual stocks. All right, so there we go. The S&P looks bullish, at least through those particular lenses we chose to look through today. So let's go plan and place a bullish trade using our new indicator, the Arun oscillator. So first of all, let's clear off our studies. Let's go up to studies and let's just remove all these studies. Okay. Now I'm going to use an example stock, Marriott. Interesting. I'm a graduate of the Marriott School of Management. But in any case, let's load up our indicator. Now, this is one of those indicators, just like the TTM squeeze we talked about last week. This is an indicator built on other indicators. So, Brian, if you want to say if you want a discussion of why I set the stop 1% below, rather than revisiting that, you can go check out the archive for that. I kind of always have to balance my time. There are those considerations. I'd love to explain it right now, but it'd take me a little bit of time. But let's come up here. And the first thing I'm going to do is add the indicator that our Arun oscillator is built on. Now I'm just going to, typically I'd type in, and I could, I guess, let's just do it. Let's type in Arun. And when you do that, you'll notice here in our studies, there are two named Arun. We have our Arun indicator, so let's add that to our chart. And we have the Arun oscillator, and let's add that to our chart. So the one on top is going to be our Arun indicator, and then the one on the bottom is going to be our Arun oscillator. This one on the bottom is the one that we're going to spend most of our time on today. Let's apply these to our charts and click OK. And so there we go. We're left with the Arun indicator. You can see the name right here. You can see oscillator right there. And next to each one, you can see the number 25. The 25 refers to what we call the look back period. That's a fancy way of saying we're looking back over the last 25 candles to build each of these indicators. All right? So let's talk about how these are constructed. Let's open up our Scratchpad. Some technical indicators can be kind of complicated in their algorithms, in the things that generate the indicator. Others, not so much. So for now, what I'm going to do, I'm going to hide the Arun oscillator. Okay, let's talk about how the indicator is built first. So let's come up here to our little flask icon. And if you didn't know, if you want to hide an indicator, if you want to hide a study, but not just delete it, so you have to go find it in the menu and load it again, just click on the little eyeball there and click apply. And so that the oscillator is now hidden. So as we look at the Arun indicator, what I want you to focus on are these two colored lines. We have the green line and we have the red line. The green line is known as the Arun up, And guess what the red one's called? Arun down. Yep. So what these are doing is that we're looking back over the last 25 days. That's our look back period. And we're looking to see how long has it been since we hit a 25-day high. There's our Arun up. And how long has it been since we hit a 25-day low? There's our Arun down. And since these are both constructed, looking over the last 25 days, let's just look at just the last 25 days. So if we were to count 25 candles back, that would take us back to May 22nd. That's going to be right there. Let's just click on that and zoom in on just that time frame. I think it just helps visually. So this is the time frame that both of our indicators are built upon. All right. All right. Hey, Rick, very good. You wanted to add saw a way to watch today's video. Okay, cool. Yep. Yeah, you can find those on the watch list. Pardon me, on the playlist, right? Okay. So let's talk about how these two are constructed. All right, and maybe just to clean things up, let's just look at them one at a time. Another little technique we can apply here is if you go to Edit Studies, go to your Arun indicator. Let me just hide the down one. Arun down. We're not going to show that for right now. So here's our Arun up. And you'll notice that it ranges from 0 to 100. And here's how that's calculated. Here's how its position is calculated. So we have Arun up. Take 100, multiply that by, this is where I struggle. Because you know how in math we'll use a letter to stand in for a concept? N minus something, in this case. Here's the equation. N minus the days since the high. And I know it can seem a little bit complicated as I explain this. I think you'll catch on pretty quickly. And even if you're not curious about how the thing is constructed, you just want to talk about how it's used to plan and place trades, we'll definitely do plenty of that today. But in any case, here's the equation to generate this line. The Arun up is 100 times N minus the number of days since the high divided by 25. Well, N just means the look back period. And then we're using 25 days, so we just type in 25. So we look at, so let's put this into practice. Here's today. If we look back over the last 25 days, how many days has it been since we hit a 25-day high? It has been 0 days, because today's the day that we hit a high. So we just take this and put in a 0. So that leaves us with 25 divided by 25. 25 divided by 25 is what? It's 1. And then if we multiply that by 100, 100 times 1 gives us the value. What is our current value on this Arun up? It's 100. Well, there we go. So every day we just go through that equation. Like if we were to go back here, let's just march back in time. There we go. So you notice I just clicked down on that bar and moved it back. So here we are on, what day is this? This is the 23rd of June. Well, that was definitely not the highest day. As a matter of fact, I can look back here and I can see the highest day was actually 24 days ago. So if I have 25 minus 24, that's only going to leave us with 1. 1 divided by 25 is going to be what? 0.04. And then 100 times 0.04 is going to, or it should be 0.04. That would give us a value of 4. What was our value back then on this day? It was 4. Yeah. So that's how we calculate that value, and it just changes. It's a numerical expression of how long it's been since we hit a high. So that's the Arun high. What do you suppose the Arun high, the Arun up? What do you suppose the Arun down is? Let's just copy this. Let's just paste it in here. Make them both bold so you can see them a little bit better. It's 100 times. So this was minus the number of days since a high. This is 25 minus the number of days since a low. All right, so let's switch things up here. If we come up and we go to our oscillator indicator, let's look at just the down. So let's show that and not show the up. But look at this day again. We'll just stay with the same day. We're not near the high. We're also not near the low. It looks like that one was about 20 days ago. Might have been 19, 20, something like that. In any case, so we would take 25 days minus 20 days since the low. 25 minus 20 is going to be 5. 5 divided by 25 is going to be 0.2 times 100. We should have a value of about, actually, okay, since the low. Oh, you know what? I got myself, I just eyeballed it and I got it wrong. Did you catch this? This wasn't the low. This was the low. So it's really only been 1, 2, 3, 4, 5 days since the low. There we go. 25 minus 5 divided by 25 is going to give us about 80. And actually, that was 6 days ago. Anyway, close enough. That's the equation. That's how these are determined. So that is our Arun indicator. And for some traders, they actually just leave both of these on the chart and they trade the interplay between those two. So let's add them both back to the chart. So they have the up and the down, the Arun up and Arun down. And you can probably guess how they might trade this. If the Arun up, meaning it's how many days back to till the last high, let's imagine it's been some time. When we see that up is way down here and the down is dominant, that might mean there's been more selling than buying. Price has probably come down. And then if it starts to strengthen on our oscillator, maybe that means the buyers are coming back in and a crossover may signal an entry signal. Now that's one of the potential entry signals. It's not my intention here to talk about trading the Arun indicator. Instead, we're going to be trading the Arun oscillator. So let's go back here. I want to leave this as just the algorithm rather than my examples of that algorithm. So this is calculation of the Arun indicator. Well, if I bring up the Arun oscillator, unhide it. The Arun oscillator is actually just a combination of these two. Here's the equation for the Arun, not Aaron, Arun oscillator. We just take Arun up and subtract the Arun down. That's it. That's the oscillator. So if we were to look at the current Arun indicator positions, we can see that the up is here at 100. The down is at 62.5. So what would we have? About 38.5. And then we just note the difference between those two. You'll notice, oh, I did my math wrong. 37.5, close enough. But yeah, that's how that's calculated. So it was necessary for me to explore the calculation of the indicator in order to understand the oscillator. But now that we've done that, let's talk about trading the oscillator. What it might signal, what it might imply to the trader. So with our oscillator, again, it's range bound. It can't go above 100, can't go below minus 100. Because if we have our Arun up, it can go all the way up to 100. The Arun down can only go down to 0. So if we're subtracting the Arun up or the Arun down from the Arun up, the biggest distance is 100. If the Arun up is way up there, if the Arun down, let's say, has a positive value of 100, while the Arun up, the bullish trend, is down at 0, it can result in a negative value, down to negative 100. All right, that's all the construction of the oscillator. I know that there are some of you out there who really like to understand how it's constructed. That's fun. If you want to go back and revisit that portion of the presentation, you can do that. But here's how it might be traded. Imagine you're looking at the oscillator and you see that that green line has been coming down. What that means is that the Arun up, the number of days since recent highs has been coming down and coming down, or it's actually been more and more days since that high. That's an indication of a possible downward trend. And if we get a crossover, where it means it's been more days since we hit a high than since we hit a low, that's a real signal of weakness to a technical trader of the Arun oscillator. That's where we cross over the zero line. That means that, yeah, it's been more days since we hit a high than we hit a low. And you can see that sometimes expressed as a downward trend on our chart. Now, if we hit an extreme where that green gets way lower, what that implies is it's been a long time since we hit a high. We've recently hit a low, and you can see that here on our chart. Udesh says, how does Arun oscillator compare with RSI? It's a good question, Udesh. The difficulty is, here's the thing. It just took me 15 minutes to explain how the oscillator is built. In order to do a fair comparison of the two, I'd have to also explain how the RSI is built, and then compare all the pros and the cons and the different signals from each. It's a little bit deep waters for me to tread into within the confines of a 45-minute webcast. So legitimate question. What you might want to experiment with is just bring them both up on a chart and do a comparison across a range of different symbols and see if one seems to be more serviceable to your preferred approach than the other, if the intention there is to use either one at all. But yes, when we see this, our Arun oscillator line get very low, the literal interpretation there is that we are a long way from highs and we're right close to lows. So that's just bearish. Why? What would a trader care about that? Well, if there's a change in those conditions, that might be a signal that a trend is about to reverse. So here's entry signal number one, and that is a trend reversal signal. And that's when we've gotten down below the zero line, meaning that the Arun up is now below the Arun down. But in any case, if our green line is down below zero, and then if it starts to trend sideways. So I want to focus on this period just after the change of the year. Early January, we're below zero. Prices have been softening. We're way off of highs. We're right close to lows. And then we start to go sideways. What that means is that there is no longer a widening of the difference between our two oscillators. This might signal that we are starting to move into a sideways trend on the stock. And then finally, our trader might look for a bullish breakout of that sideways behavior. So 3 steps here. Number one, look to be below zero, indicating that downward move. Step number 2 is look for a sideways behavior on our oscillator. Now, generally speaking, most of the time, at least in my experience, a trader, having it go sideways for 2 days, not enough. 3 days, not quite enough. Typically, it's 4 days or more. So here you can see we actually went from January 7th to January 14th, where we're just going sideways on our oscillator, and then it started to rise. Now, what that might mean is that we're starting to see bullishness finally, after a long time here, over the last 25 days. This is the first really truly bullish behavior on our indicator, and that can be a signal that that trend is reversing, right? Now, Chris B says short answer might be the Arun oscillator measures trend strength and RSI measures price momentum. Yeah, yes, it can. It's very common, actually. Chris B raises a good point that this is commonly interpreted to be a measure of trend strength. But sometimes it can just be a continuation of a trend. So we'll talk about that too. So in this case, it looks like we got an entry signal just here as we move to January 15th. What was that? About right here on this red candle day. Notice this is not in the direction of the established trend. This is actually a counter trend move. This is a trend reversal sort of an approach. Now, since this trend has been going down, where might the trader plan to take their profits? If the entry is a bullish breakout of a sideways pattern below zero, that's our entry. The exit actually might be taken from the chart itself. Just go up to a previous resistance there. Well, almost always. I'm tempted to say always, but I always have to qualify. I have to qualify that and say almost always there will be a previous resistance level, of course, because we're not close to highs. We're closer to lows. So we look back to the previous highs, and that may become the target for exit. So are there other examples here? Yep. Here we're below zero, going sideways, and then we broke to the upside, and that looks like that happened right about here. We're going sideways up to the 30th. On the 31st, we went up. That was right here, would be our entry. Where would be a previous resistance? Looks like there could be a pretty good case made for a previous resistance, maybe right across those lows. Yeah, there we go. All right, so that is one trading system that might be identified using this oscillator. Now there's another one, and that is what's known as a crossover. And it's simply when our Arun oscillator green line is below zero and then rises up and through. So for example, let's see, let's find a crossover. Here's one right here on MAR. Here's another one right here. If we have the visual of our Arun up and our Arun down, it just means that the green had crossed up and through the red, basically. But that's the typical entry signal, with a typical exit signal being when we cross back down and through that 50. Now, with this sort of an approach, it's usually paired with a trend approach, like a moving average approach. So for example, we might come up here, and let's do a moving average trend confirmation. Let's do an exponential moving average. Maybe our trader is looking for bullishness in the form of a 10-period moving average, a shorter term period moving average, trading above a longer term. Say our 10 is above our 50 as a possible bullish confirmation. Apply and click OK. So that's interesting. It looks like we do have a recent Arun oscillator crossover entry, and our 10-period moving average is above our 50. So our trader might say, well, the trend is up, and we have a confirmation of a continuation of that trend in the form of an Arun oscillator zero crossover signal. So, Gabriel, you say I'm the best instructor ever? Well, that's nice. Thank you. Appreciate that. Well, that's nice that Marriott has that signal. However, I will say it's not a very common signal. This is one where it might be useful to build a scan to help us find these kinds of stocks. So let's just go build a pretty straightforward scan. Now, this one, I'm actually going to be using a technical scan. Can't do it on paper money. So I'm going to switch over to our fake live account. And let's go to the scan tool. We're going to be using what are known as study filters. So the first thing we'll do, let's say that our trader is not really interested in the really low liquidity stocks. So how about we just keep it in large capitalization? Let's go for 10,000 million capitalization. Those are $10 billion companies first. Actually, for the rest, let's just close out those stock filters. And let's add some study filters. I'm going to add 2 study filters. Now, the first one, I don't know if any of you have used this function before. I just recently explained it in another webcast. We're going to do a custom pair of filters, right? It doesn't know what we're going to be filtering for. We're actually going to be filtering for the 10-period moving average being above the 50. We're also going to filter for the Arun oscillator just recently, let's say within the last 3 days, crossing up above zero. So let's do those moving averages first, right? So let's add a condition. Our condition is going to be a study condition, and we're going to be using exponential moving averages. And we're going to be looking for the 10 exponential being greater than 50. Length of that second moving average is going to be the 50. That's it. Now it's going to say within 1 bar or 10 bars or whatever. We want to leave that at 1. What we're telling the system is we want the 10 to be above the 50 today, not 10 days ago, but today. Okay, so let's save that. Click OK. The other one is going to be our, let's do a custom. Remove that ADX crossover. This one is going to be our Arun oscillator. And our Arun oscillator, we're just going to say, is crossing above a value of 0 within the last 3 days. So Isaiah says, does Thinkorswim have that feature for scanning? Are you asking Mike Fairborn something? Okay. Isaiah, oh, you want one for Kahold? That could be created, but might want to use a custom script for that. Let's save that one and click OK. There we go. So let's run our scan. So we're looking for stocks where the 10 is above the 50 today. Not just crossing today, but at least above the 50 today. You know, if it was there yesterday or the day before, it's still qualified. But our Arun oscillator is above the 0 line within the last 3 days. Let's scan. And let's see what we get out of all of the $10 billion companies. That looks like a good number. We could even be more demanding here. Let's see. Let's just grab one. Actually, I put in the right? Yeah, I did. Market cap, $10 billion or more. They're not 2,300 $10 billion companies. Why is that doing that? Let me try that again. Interesting. Well, okay. I'm going to have to explore that, why that's coming up with that many. In any case, let's go back to our trade. Oh, yeah, that is interesting. Yeah, somebody's proposing, Crispy, that we scan just in something limited like the S&P 500. I'm still wondering why it's coming up with so many. That it's a little bit puzzling. But yeah, let's route this just to. It's another way to filter for just the big companies. Is to route this to maybe just the S&P 500 companies or S&P 100, as Chris is proposing. Let's run our scan, see if any of those S&P 100s. Hey, there we are. Let's look at, of course, Nike. Nike's blowing up today. Go to our charts. John Deere. On our paper money, which is where we have our studies loaded. There we go. Now, did this one recently cross over the 0? It sure did. Is the 10 trading above the 50? It sure is. So yeah, that is an effective little scan there if this is what one is looking for. Anyway, let's go ahead. I'm going to buy some shares of MER. Place our trade by clicking on the ask price. We're going to buy 100 shares would be $2,700. How about we do shares? About $5,400, $5,500. Let's buy those at the market price. There's certainly a risk when we're placing market orders. Prices can change quickly in fast market conditions, resulting in execution prices that can be different from a quotes displayed at order entry. Buying the MAR that we've been using as our example all along, and we're going to send that order off. All right, guys. we've actually accomplished what I set out to do today. I wanted to talk through this new indicator, new to some of you. I'm not saying it's new to the platform, but it is one of those that does seem to fly under the radar of some traders. So I wanted to talk about how the Arun oscillator is built, how it might be used to identify trend reversal and trend continuation signals. And I wanted to run a quick scan to see if we could find some stocks that have those signals. Hope you enjoyed that discussion, everybody. I just had a thought of what I might need to go in and change on that scan. Just make sure that I'm pretty sure that was market capitalization. But in any case, this is what we do on Fridays. I hope you enjoyed that. Hope you put it in your personal calendar to join us on Fridays. Thanks, Mike, for helping out there in chats. But everybody, do yourselves a little favor here. If you haven't subscribed to the channel, make sure you do that. Trader Talks Schwab Coaching Webcast is the channel. You can click on the subscribe button down in the lower right-hand corner of the video display window right now. That doesn't cost anything. It only takes a second, but that's where we house our previous playlists. Also, make sure that you're following us on X. You can find Mike there at Mike Fairborn CS. You can find me there at Cameron May CS. Make sure you click the like button if you enjoy one of our webcasts. It's a pat on the back to your presenter, and it gives a boost to their webcast and the YouTube algorithm. Hey, everybody, thank you. Have a great weekend. I will see you again next week. We'll follow up on this trade and others in coming webcasts. I'll look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.